People are about to experience higher levels of inflation, and yet they have no idea what's going to happen. You came here for the truth, so let me unveil that for you. This is big news. This is huge. What we need to look at specifically, number one, is the consumer. The consumer is truly somebody who affects the economy bigger than anything else. So that's our primary focus. The second thing we need to look at is stocks, because what we are seeing today is higher levels in stocks that do not reflect what's happening in the economy for the most part. And number three, we need to look at the job situation. Jobs right now are all over the place. There's so many different statistics and indicators we got to look at. I'll cover some of those today. Let's go. My favorite and yours, Janet Yellen, sees, quote, several more months of rapid inflation before easing, worries about the housing impact. Oh, wait a second. Just a few months ago, they were saying there's no worry because inflation's temporary. And I told you multiple times, based on what they've said, September is the moment that we should all be watching, because by then we're getting past summertime, and in this point here, inflation should start to slow down because it's year over year measurements, and yet that's not the case. Now they're talking about, well, it's going to be longer. If you look at what the White House said, it's going to be years of persistent inflation, but it's still temporary. So what is this temporary or transitory talk that they mean? You know that it's a complete lie. She expects prices ultimately will fall back to more normal levels and cited market-based inflation measures as proof that longer-term expectations remain in check. But for those on a lower income, those home buyers are going to see some serious problems. Of course, because by then the house has already climbed by 30% and they are completely just out of it. They can't get in. Treasury Secretary Yellen says the Federal Reserve has done a good job under Powell. That's right. She's completely supporting the system. And of course she would. We know that all of these people in the system do this. Okay, they act like cheerleaders for each other. The bond king, Jeffrey Gundlach, said that the dollar is doomed over the long term because of the rising US deficits. In the short term, he actually says that it is looking good. So we'll see what happens with the dollar. Of course, I think I have that pulled up in here, if you could see. And just trying to note the fact, by the way, you could see what I had drawn the last time that I showed you this, that it was rising. And look, it has continued to do so. So of course, we know what the directions are based on the indicators. We can see that, as well as the fundamental aspects that are in line with that. Okay, so I want to pull this back. So he basically says the dollar is going to fall pretty substantially at some point due to the increase in the US trade and budget deficits. It's a question of what your time horizon is. So people are unaware, of course, at what point this kind of thing happens, but mathematically we've already passed the point of no return. We know that to be a fact. Now, home buyers are paying cash. Home buyers paying cash are dominating the property market in these cities. So some people have so much cash. They're buying houses, and you know how expensive houses are today. In some Florida and New York metro regions, it's tough to compete for homes unless you have access to a ton of cash. And they actually have a chart down here. If you look at this, West Palm Beach, Naples, Nassau, Northport, Port St. Lucie, go down a little bit further, San Diego, LA, Richmond, Oakland, so on. That's a lot. To be paying in cash 16%. These are high numbers, and it just tells you that some people are clearly winning, others not so much. Stocks are near all-time highs, and though US futures suggest a softer open on Thursday, by the time you're watching this probably already passed, it's much easier to find bulls than bears these days. But as they mentioned here, according to this particular strategist, he said, look at the RSI. The last time we saw the RSI like this was in 2018. And for those paying attention, in 2018, we had the whole problem with the VIX and so on. It's interesting. So I'll show you some of that. He's talking about the tech stocks in particular. Look at this. This is QQQ. These are basically the tech stocks. It's ETF based on the tech stocks. And while certainly over the past 2 trading sessions, that has been the case, but look at the longer term trend. I mean, this is June, beginning of June, and it's basically just gone up in a straight line, almost every single day, straight line upward. We knew that. I told you this before about the tech stocks and the rotation that was taking place, moving back out of value stocks into tech stocks, and this happens all the time. And it tended to bottom out right around this point here, May 19th. So you looked at that statistically. I mean, anybody who was paying attention based on the technical indicators, you could have definitely got in at this point right here, or even if we got in on the 24th when the MACD turned out to be positive, you could have got in at that point and you would have been buying in the QQQ, let's just even say around here, 333, and it's currently at 360, and that would have been an easy buy for some people. But the point of the matter is, you're looking at the indicators, specifically the RSI, as the article points out to being heavily overbought. Okay, there are 2 ways to look at the RSI. Number 1, when it hits above 70, that's considered to be overbought. When it hits below 30, that's considered oversold. However, some people like to look at it, and I tend to agree with this in a way, to use the RSI as this oscillator, in that above 50 is bullish, below 50 is bearish. So right now it's above that. But when it stays in this point here, it's persistently going, let's say, against the grain, it tends to find its way back down. So you can't just look at the RSI as a means of saying, okay, I'm going to buy based on this. No, but you use it in conjunction with different indicators as well as the fundamentals behind it. You could see that the MACD showing us that this has slowed down significantly. We'll see what happens, okay? You could look at the NASDAQ in general, following generally the exact same pattern. We know that that's the case. There are others in here, NVIDIA and so on, taking that same pattern. It started to come down. So maybe we're going to see that being reflected in the general stock market index. I don't know. I don't even know if anybody wants to hear this type of stuff. I could tell you exactly what you need to know, but anytime I do a video about it, I get bad feedback. Anyway, container rates to the US top $10,000 as shipping crunch tightens. Look at this chart. Wow. I mean, it just went berserk. It went parabolic in the amount. This is Shanghai to LA and Shanghai to Rotterdam. And you just see that going absolutely parabolic right now. And this means ultimately higher prices paid on the goods inside. Because if I have to ship stuff, let's say from China to Los Angeles in this case here, I got to pay more. What am I going to do? Am I going to take a cut of my profits, or am I simply going to say, hey, if you got to buy that, XYZ thing, if you got to buy that little widget, you're going to have to start paying more. Simple matter of fact. United States import prices, this has gone up as well. Month after month after month after month. This has gone up into crazy territory. Industrial production month over month. So you got to watch out month over month as well as year over year. Things are kind of wacky right now, but it's looking rather weak, I would say, at this point. Now we look at the jobless claims. They're at a 16-month low. Shortages hamper manufacturing. So there's so many different things happening with the job situation. You see in some places where there's so much demand for certain jobs, they can't find enough people. Then you've got other places like McDonald's, they can't fill their positions, ultimately will be replaced by Flippy the robot and AI ordering at the drive-thrus and so on. We know that. So, I'm seeing all the different pieces and it's not good at all. What I would tell people, number one thing, if you're in an industry that is most likely to be displaced, the very first thing you should be doing is figuring out how you're going to get around that in the medium term, not the long term. Get around that. Start building a secondary income. This is the initial jobless claims, and you can see it's just been declining. That is definitely the trend. Okay, now I want to talk about something huge, so stay with me. Let's get into the money GPS insights. Number 1, the government is now they're completely admitting that inflation is higher than expected. Number 2, The average person, as a result of this, is going to have less spending money. Number 3, if I can give any advice, it would be that you must have a skill that is going to be doing well in times of crisis. It could be anything, but I would assure you that now is the time to attain a skill. If you don't have one already, if you do, sharpen those skills. This is what you need to know right here, because you can see the reduction in unemployment benefits, okay? Total card spending grouped with expiration date of the expanded unemployment benefits, and it correlates entirely. Once they pull away the stimulus, there goes the spending. Simple matter of fact, documented right here, okay? This is an absolute fact. We knew this. I've shown you that in every previous, all throughout this cycle. This is just showing us from May, towards July, and just trying to give you an idea of what's been happening. But this has been the case. You could see that the whole period of time. Stimulus comes in, everything goes up, the economy's fantastic. They're reporting on how fantastic it is, and then the stimulus gets put away, or it's finished and so on. And you know what? We're not going to touch those indicators. We're not going to mention those statistics. We'll hide those. Don't worry. Sweep it under the rug. Total card spending. This is just a few charts. In fact, I'll just move through really quickly. Essentially, what we're looking at here, as well as all of these, as well as this here, this is online spending. The trend is down. That's all I wanted to show you here, okay? So they are looking at this Bank of America, by the way, all of these, and it's just showing you that their trend is down. That's all. I'm not going to get into all the percentages and so on. I think you get the point. But that's not good coming at this time here specifically, because there needs to be expanded growth, because we have more stimulus and quantitative easing. What do you think is going to happen if they start increasing interest rates just a little bit? What do you think is going to happen if they pull away that stimulus entirely? Of course, you're going to have people that are completely broken. And you don't want that to happen if you were relying on your pension fund to still be there, which need to be bailed out in many cases because that's how bad their performance has been. If you rely on your Social Security and the government says, oh, well, we don't have it because we're running so much of a deficit, we can't afford to pay you what we told you. Oops, right? You won't hear that anywhere else. And of course, what about the fact that if you were about to retire, or you had, went all out for whatever reason, you bought this and that, you used your home equity line of credit, you used all these things because debt was cheap. Oh, but now you've got a problem because you got that margin call, because you suddenly are dealing with assets that are not as valuable as they once were before. Things change, and they change real fast. Look, if you want to know the truth, you got to get on the insiders. The insiders is my way to get to you directly, and your way to get to me directly. Don't hesitate. Check it out. Just go over to themoneygps.com. It's totally free, of course. There's no catch. It's you put your email in there. I email you the video of the day. So get on there. It's available at themoneygps.com. If you haven't already, you got to hit that like button. Come on, hit the subscribe button. You got to do this. I want to get this channel up to 300,000 subscribers. Hit that subscribe button. Hit the notification bell. Let's do this together. If you haven't seen this video already, you definitely want to check it out. Click it, and I'll see you there.